Hello, my name is Jason Corsello. I'm the founder and general partner of Acadian Ventures. Acadian Ventures is an early stage venture capital firm investing in companies that are transforming the world of work. What does that mean? We invest in companies, typically at the pre-seed, seed, and post-seed stage, in companies that are using transformation. That could be technology transformation, new business models, entering into emerging markets, in how we work and where we work today. We think work is broken, and we have this belief in the concept of sustainable work, which is uniting employers and employees and enabling things like skills creation, skills development, productivity improvement, improving health and wellness, as well as really ultimately providing financial independence, aligning things like HR and payroll solutions with offering financial services. We think this is a huge category. Many define it as the future of work today. And if you think about and look at the future of work category today, there's over 100 companies that are valued over $1 billion today. Some of them are in the public markets. There's 34 publicly traded companies that are today valued at nearly $500 billion. There's another 65 venture-backed companies that make up about 200 billion in terms of market capitalization. And then we have about 13 companies that are private equity backed that make up about 50 billion in market capitalization. So when you add up those 100 companies today, there's over $750 billion of market capitalization. We think this is a huge market, is predicted to continue to grow at a substantial rate. Today, we've invested in nearly 30 companies located across the globe. A core part of our thesis is investing globally. So about half of our companies are based in the US and half of them are based outside of the US. We've invested in companies today across 13 countries, including North America, the United States, Europe, as well as some emerging markets, including Southeast Asia, Africa, and Latin America. Our first fund, which we just finished deploying last quarter, continues to outperform the market. In fact, we're a top decile fund for our vintage year of 2019. You can see some of the graphs today. What we're most proud of is really three metrics. Our multiple on invested capital today is about 3. Our total value to paid in capital today is about 2.4. And most important to us and our LPs is our DPI, or distribution to paid in capital, which is about 0.3. This is a very important metric for us and our LPs, and continues to stand out in a vintage of mostly funds with no DPI that exist. You can see some of the metrics here in terms of that performance. So all three categories of TVPI, DPI outperformed the market, and our top decile. Our IRR on a gross basis is around 82%. On a net basis is around 64%. So we think our first vintage or our first fund is a great model for us to continue to deliver strong performing funds in the future. You can see some more of the stats here. Our first fund was about 12 million in terms of fund size. We invested in 27 companies. To date, we've had 6 exits and remain 4 unicorns in the portfolio. A couple of those companies that you can see here, but of most relevance has been Nomi Health. They're a Salt Lake City-based direct healthcare company and the founders that we've known for a very long time. It's been a phenomenal success story for both the company and ourselves. We invested in late 2019 at a $20 million market cap. Today, the company trades at a $1.7 billion market cap. They just completed their Series B financing last quarter. Last year, we launched Acadian Ventures Fund 2. We are now in the final stages of closing Fund 2 within the next couple of months. Essentially, we're going to repeat what we did with Fund 1 in terms of both the portfolio construction as well as the fund strategy and the target DPI. We've got a phenomenal team of operators. We are an operator-led fund. I launched the first fund as a solo GP in 2019. Last year, Thomas Otter came into the fund. He was an LP in Fund 1, became a GP in Fund 2, and has been actively investing along with myself out of Fund 2 for the last year. We also have a number of venture partners and advisors Leanne Levensaler ran Workday Ventures, as well as had a number of roles at Workday. Dave Clark, who was also at Workday, he was the CTO at Workday, is a special advisor or senior advisor for the fund. We also have started to build out our support staff. Of note, Ryan McQueenie, who's our Chief Financial Officer. A core part of our fund is our operating network. I know lots of funds say that, but we've got a who's who list of folks that come from work tech, HR tech, and SaaS in general. We're very proud of this network, and it's inclusive of ex-CEOs, CMOs, CTOs, heads of revenue, and a tremendous asset for us, as many of them are helpful to our companies, advisors to our companies, and are always willing to help support our companies. In terms of our own progress, we are in the final stages of closing Fund 2, so I describe us as going from a fund to a firm. We're now building out all the infrastructure to support that, building out our team, building out our operating network, which we think will now endure us to become a franchise business for a venture capital firm. All of the pieces have come into place in terms of the team, the track record, and now the platform that we continue to build. In terms of our second fund, we've now done three closes of the fund. We've started to invest already out of the fund. We have 9 portfolio companies that we've already invested out of Fund 2, and we're looking to close the fund here shortly. This is Thomas, myself. We thank you for your time. We have a number of resources available to dig in, and we look forward to meeting many of you in the next couple of days. Thank you.